You're not going to believe this, but I just saved a client $57,000 in estimated tax penalties this quarter, and she was doing exactly what her previous CPA told her to do. Hey there, I'm Tiffany Phillips, CPA and tax strategist, and if you're a business owner who's been told to just pay your taxes when you file in April, this video could save you thousands. Before we dive in, hit that like button if you're tired of overpaying the IRS, and make sure you're subscribed because we're covering the tax strategies your CPA won't tell you about. Let me tell you about what happened to my client Rachel. This brilliant woman entrepreneur had been religiously following her old CPA's advice. Just pay your full tax bill when you file in April, he said. You'll be fine. Well, Rachel did exactly that. She filed on time, paid every penny she owed, and then the IRS hit her with a penalty that made her physically sick. Here's what that CPA never told her, and what 99% of CPAs won't tell you. The IRS doesn't care if you pay your full tax bill on time. They want their money throughout the year, and if you don't give it to them, they'll punish you with penalties that can literally bankrupt your business. Today, I'm showing you exactly how to pay estimated taxes without overpaying or getting penalties. We'll bust the biggest myths, walk through calculations step by step, and I'll give you the exact system I use to keep the IRS happy while keeping more money in your pocket. Let's talk about the estimated tax trap. Here's what nobody tells you about with estimated taxes. They're not just for business owners. I cannot tell you how many clients come to be shocked that they owed estimated taxes when they have a W-2 job. Drop a comment below if you've ever been surprised by estimated tax penalties. I read every single comment. But Tiffany, they say, I'm an employee. My employer takes out taxes. Yes, but do you have a side business? Investment income? Did your spouse start making more money? Any of these things can throw you into an estimated tax territory faster than you can say quarterly payment. Let me tell you about my client Maria. She's a successful consultant making about $300,000 a year. Her previous CPA told her the same thing. Just pay when you file. Maria trusted him. Why wouldn't she? He's the expert, right? Wrong. When April came around, not only did Maria owe $60,000 in taxes, but she also got slapped with an $8,000 estimated tax penalty. $8,000. That's a family vacation, new equipment for her business, money that should have stayed in her pocket. The worst part? When she called her CPA to ask why this happened, he actually said, well, you should have known you needed to make quarterly payments. Should have known? Isn't that literally what she's paying him to know? Here's the truth. The IRS expects you to pay your taxes as you earn income. They don't want you to wait until April. And if you don't pay throughout the year, they'll hit you with penalties that compound quarterly. Okay, let's talk about something your CPA probably never mentioned, safe harbor rules. This is where you can actually use the tax code to your advantage. The IRS has what's called a safe harbor provision. If you pay a certain amount throughout the year, you're protected from penalties even if you end up owing more when you file. There are two safe harbor options. Option 1, pay 100% of what you owed last year. If you owed $20,000 in taxes last year, pay $20,000 in quarterly payments this year, and you're protected from penalties even if you end up owing $30,000 when you file. Option 2, pay 90% of what you'll owe this year, but here's the problem. You have to predict the future. Most people can't do this accurately. But wait, there's a catch. If your adjusted gross income last year was over $150,000, the safe harbor jumps to 110% of last year's tax. Now, here's where this gets really powerful. Let's say you had a terrible year last year and only owed $5,000 in taxes. But this year, your business is booming and you're going to owe $50,000. Most CPAs would tell you to pay quarterly payments based on the $50,000. That's over $12,000 per quarter. But if you understand safe harbor rules, you only need to pay 100% of last year's tax, just $5,000 for the year, or about $1,250 per quarter. I had a client in exactly this situation. Instead of paying $15,000 per quarter like her old CPA suggested, she only needed to pay $3,000 per quarter to stay penalty-free. That saved her $48,000 in cash flow throughout the year, money she could reinvest in her business or keep as a cushion. All right. Let's get down to the nuts and bolts. I'm going to walk you through exactly how to calculate your estimated tax payments. Look at line 24, that's your total tax before any withholding or payments. Let's say that number is $30,000. If your adjusted gross income was under $150,000, you need to pay 100% of that throughout the year. If your AGI was over $150,000, you need to pay 110%. So in our example, you'd need to pay $30,000 throughout the year. Divide that by 4 quarters, which is $7,500 per quarter. But here's where most people mess up. they forget about withholdings. If you have a W-2 job where taxes are already being withheld, you subtract that from your required payments. Let's say you have $10,000 being withheld throughout the year. Now you only need estimated tax payments totaling $20,000 or $5,000 per quarter. If this is helping you understand your estimated taxes better, smash that like button and let me know in the comments what questions you have. I had a client paying $12,000 per quarter because that's what her CPA calculated. When I looked at her situation, she only needed to pay $4,000 per quarter. She'd been overpaying by $32,000 per year. Now, let's talk timing. They call them quarterly payments, but they're not actually due quarterly. The due dates are April 15th, June 15th, September 15th, and January 15th. Notice the weird spacing? 2 months between April and June, and 4 months between September and January. Here's the critical part. Make sure you're using the right payment method. Do not mail a check to the IRS. I had a client mail a $25,000 check. The IRS deposited it, but never credited it to her account. $25,000 vanished in the IRS black hole. It took 6 months and $3,000 in professional fees to fix it. Use IRS Direct Pay instead. Go to irs.gov/payment, select Direct Pay with bank account, choose Estimated Tax, and select the correct tax year. Make sure and save the confirmation page. You want proof that you made the payment on time. Here's a strategy most people don't know. You can make payments early. If monthly payments work better for your cash flow, do it. The IRS doesn't care as long as you meet the minimum by each due date. Now let's talk about what happens when things go wrong. The estimated tax penalty compounds quarterly, but there are ways to get penalties waived. The IRS has reasonable cause exceptions: casualty, disaster, unusual circumstances. If you're over 62 and retired or became disabled, you might qualify for a waiver. I had a client who started her business mid-year and got hit with penalties. Her CPA told her to pay them. Got the entire penalty waived because she had no tax liability the previous year. Saved her $4,000 with one form. What other tax topics do you want me to cover? Drop your suggestions in the comments below. Here's another strategy. If you're short on estimated payments, you can increase your W-2 withholding at year end. The IRS treats withholding as if it had been paid evenly throughout the year, even if it all comes from your December paycheck. Look, estimated taxes don't have to be this penalty-filled nightmare. The rules are straightforward once someone explains them properly. If your CPA is getting estimated taxes wrong, what else are they missing? That's why I wrote Your Biggest Expense: How to Legally Pay Less in Taxes and Keep More Wealth. This book reveals 10 strategies most CPAs never mention. You can grab your copy at yourbiggestexpense.com. I'll include bonus materials that show you how to audit-proof your strategies. Don't let another quarter go by overpaying the IRS. If this video helped you, hit the like button, subscribe for more tax strategies your CPA won't tell you about, and ring the notification bell so you never miss an upload. Drop a comment below with your biggest estimated tax question. I read every comment and often turn them into future videos. You work too hard for your money just to hand it over unnecessarily. Every dollar you overpay is a dollar not growing your business or providing for your family. And remember, it's not what you make, it's what you keep. So keep more.